Hey everyone, and welcome. My name is Rob Phelan, also known as the FI Educator Online, and today we are talking about student loan. Now, we're going beyond the basics of just what a student loan is. We're going to really try and dive into some of the nitty-gritty about how these student loan works and how we can really optimize those in our wealth building journey. And I am joined today by Meagan McGuire from Student Loan Planner, who is the expert, the best expert I can find about student loans and how we can do better with these and how we can navigate this process, because it's a little bit of an unknown for most of us. And even me as a teacher who teaches personal finance, it's been a long time since I navigated the student loan process. Personally, I don't have a child that's near that age yet, so I haven't even started thinking about it. So it's great to have that other expert come in who can give us some real up-to-date information about how student loans are working, how you can navigate the process, and then on the repayment side as well, what are some things we need to think about and do? Meagan, how are you doing?
Hello, I'm doing good. Thank you for having me today. I'm looking forward to this conversation.
Yeah, so you are a certified financial planner and a student loan professional. So you've really
hmm
niched down into like this is your area of expertise.
hmm
Why? Why were you
Good
so fascinated
question.
with student loans?
Yeah, I mean, I think honestly, it came down to I was in the financial planning space for a while, and I wanted to work with folks who needed some of the basics of their financial plan. I think when you think about a financial professional, you think about investing and like lots of money, and you know, you got to start somewhere though. So I wanted to work with folks who were starting to build their savings and build up their investments, and I quickly realized that student loans were a big elephant in the room for a lot of people, where that was making them feel like they couldn't save or they couldn't, do things that they wanted to do with their life or their money before the student loans were taken care of. And with that being such a big part to the puzzle, I felt like there needed to be more attention on that versus just kind of, pay off the debt and then move on. Having a more specialized approach towards it could be more helpful to help people get out of the student loan debt faster.
Yeah, because student loan debt, it's not something that kind of just takes care of itself. Like it's something you do actually have
hmm
to address and think about. Some
Yeah.
stats I found, like most student loans are issued for 10-year terms. So it's supposed to take you 10
hmm
years to pay it off, but the average person takes much longer to do that. I think closer to 20
hmm
years.
Yeah,
And
that's
that in
really
itself
fair.
is an issue. The amount of our discretionary income, so the money that comes home after taxes that you have choice over how to spend, a big portion of that for a lot of young Americans in particular is going towards student loans. And even more
hmm
concerning, the amount of it that's going towards student loans for close to retired people because they've either
hmm
pushed off their own student loans or taken on student loans for their kids. So this is a
Yeah.
problem that stretches across like most US adults pretty much as soon as you leave high school, right?
Yep. And I commonly get, man, I wish I knew more about student loans when I borrowed them. And so talking about this proactively can be really helpful to help you just be more in the know about what you're getting yourself into if you do have to utilize student loans to go to school. Because there is still a return on investment there that we'll talk about. But doing the due diligence on the front end could be really helpful to set yourself up for success on the payback journey.
Yeah, it's one of the few I feel like financial products or loans especially that we can just kind of walk our way into without really understanding it in the
Yeah.
slightest. Like
Mhm.
you go get a car loan, like you're going to talk to a finance professional who's going to help you kind of set up this loan, walk you through it, make sure that you can repay it because they don't want to give you a loan that you can't pay back. Same
Mhm.
thing with a mortgage. Like it's a pretty strict process in terms of who gets
Mhm.
mortgages and how much you get. Student loans not quite as hard to get and not quite as strict in terms of who gets it. So
Mhm.
we got some digging to do here. And before you guys start, I hope you have the student reflection document that goes with this talk. The first question was, why do you think student loans are a problem for U.S. Citizens? And then we're going to go through different parts of that sheet throughout this talk. And you can find the link for that below me here. Teachers, you can assign this, print it, whatever you want to do with it. Or if you're watching by yourself, glance through it, see if you can answer these questions by the end, especially our trivia section, which will be coming up later. Okay, so the first part for us is going to be just, I know we said this is beyond the basics, but let's do basics.
Mhm.
What are the different types of student loans that we can get? Because it's not just like
Mhm.
student loan and that's it. This is a loan
Mhm.
paying for college. Can it be used for anything else?
Yes. So technically, a student loan can be used for the cost of education, which encompasses tuition that goes to the school, books, supplies that you need for the classes, which typically you purchase at the school. It can cover transportation costs, housing. It's pretty broad as far as just how can you get through, the semesters? What money do you need access to get through and finish up your semester or your college experience?
I remember I went to college in Ireland, and the student loan process a little different there, but basically
Mhm.
you applied for it, you got granted X number of euros, and you had that amount just deposited into your account. And then it
Mhm.
was really like the student could use it for whatever they wanted, whether it was
Yeah.
for entertainment purposes or clothing or something like that. And there was no accountability for it having to be used for educational expenses. I think they just
Mhm.
assumed like, well, you got to pay for college, so
Mhm.
it's got to go there one way or another. Is it the same here?
It is somewhat similar. Yes. Tuition will go directly to the school. So once you get approved for a student loan, usually you do have to put in the school that you're going to, the program that you're pursuing, and then they pay the tuition directly and some of the fees that are associated with going to school there. But then they give you a refund, which I hate that term because it's not a refund, it's still a loan, but they give you a refund of what's left for you to budget off of for the rest of the semester or the academic period. And you technically, like you said, could use it for anything. It's supposed to be for housing, transportation, healthcare costs, things like that. But they're not checking to see if you used it for a trip to Ireland or so you want to be smart with it because that is what you want to budget off of for that period of time.
Okay. So let's go into the types of loans. What are our
Mhm.
options? So we need help paying for college. We've gotten maybe the sticker price, and we're like, okay,
Mhm.
I can't pay that out of pocket. I need student loans to help me. What are the types of loans I can get?
Mhm. So I would say the first kind of overarching look at this is there's federal student loans and then there's private student loans. Private student loans are issued by private companies, banks. Federal student loans are issued and backed by the U.S. government. And within federal loans, there's a couple different types as well. So once we kind of decipher, are we doing private? Or are we doing federal? If we're doing federal, there's a few different types under that umbrella. We have unsubsidized loans, which that means when we borrow the loan, interest accrues the moment we have it. We have subsidized loans, which means interest does not accrue until we're graduated and entering repayment. And then we've got Parent Plus loans, which I think is worth mentioning because Parent Plus loans are federal loans that your parent can borrow for you for an undergraduate education. So those are considered unsubsidized as well. So as soon as they're borrowed, interest does accrue. But those are maybe the three types under the federal umbrella.
Okay. So it would sound like subsidized would be preferred to unsubsidized since we don't like interest very much. Would that be true?
Yes, yeah, it is true. The thing with subsidized loans is it's based on financial need. So if we have a financial need based on your, they call it a CPI index, like the need for the cost of education, then you could be issued up to a certain amount of subsidized loans. You could also be issued grants, like there's a couple different types of grants that you could be awarded that are not loans. A grant is just they give you money to kind of subsidize the cost of tuition, which is great. But it does come down to do you have a need or not? And if you don't have a need based on their FAFSA application that you and your parents have to fill out, you will be issued the unsubsidized loans and or have access to Parent Plus loans to supplement.
Okay. And FAFSA, super important form that everyone should be filling out if they're going to college, whether they think they are going to qualify or want, need or not. Would that be
Mhm.
fair?
Yeah,
Like everyone
I
should
would
just
say
fill it
there's
out?
no harm. Yeah, it's free to do. It's, they will tell you if you have access to any grants, the free money I talked about, and or you have access to any federal loans. It's definitely worth doing.
Okay. So does it matter? So you said you have to put the name of the school down when you apply for loans. Does
Mhm.
it matter which school you go to? So like if you're going in state or out of state, you're going to a public or a private school, does it matter
Mhm.
when you're applying for student loans?
It doesn't matter when you're applying for student loans. The cost will be different though. And then also don't panic if you feel like you're comparing a couple of different schools and you haven't quite committed to exactly where you're going yet. You can change the name of the school even if you've already completed the FAFSA application. You could change it to the school you actually ended up getting accepted into and plan to pursue. So it doesn't have to be ironclad when you fill it out.
And are student loans basically a blank check? Like, is that how this actually works? That nobody really cares how much the degree is going to be? Like, you will be able to find student loans to pay for it? Or is there like a limit where someone's like, you know what? No, we're not giving you this much money to go to college?
This is a great question. So I would say yes on the federal side of things. It is kind of like a blank check. And what I mean by that, the student does have limits on how much you can borrow as an undergraduate student. So the first year of college, you can only borrow up to $5,500, so $5,500 in your own name. Second year, $6,500. Third and fourth year, $7,500. So at the end of your 4-year degree, if you're going for a 4-year degree, you'll probably have close to about 30,000 in federal student loans under your own name if you had to borrow for the cost of attendance, and it costs that much each year. Sometimes that's not enough. Sometimes college is more expensive, or if we're adding in other expenses like living expenses, 5,500 may only cover the cost of just tuition. So we have to maybe supplement with either a private student loan or a Parent Plus loan. So if we decide to go on the Parent Plus loan side of things, the parent can borrow up to the cost of attendance, and that's whatever the school says that program would cost. So if they say, hey, it's going to be $25,000 a year, then you can borrow the 5,500 under your name and borrow the rest up to the 25,000 cost of attendance that the school said it costs in the Parent Plus loans. So kind of a blank check there.
And is the Parent Plus loan a co-signer situation where like the loan is in your name too, or is this loan solely in the parent's name?
Solely in the parent's name. They have to have you, of course, going to school to be able to borrow the loan, but it is solely under your parent's name. And so it is solely your parent's responsibility legally to repay post graduation. A lot of times folks will have like a handshake agreement with mom and dad, like I'll take over the payments when school is done, but legally it's under the parent's name.
Yeah, and I know we are talking to a high school audience, so this is not as applicable,
Hmm.
but I have heard of parents like who have taken on these loans and, you know, son, daughter, kiddo has basically reneged on that handshake and they're stuck with this
Yeah.
loan. Like they didn't finish school or they don't have the ability to repay, or they decided, you know
Hmm.
what, I'm not honoring this relationship. And now the parent is stuck with this loan.
Hmm.
So just like when
Yep.
you go into any sort of credit agreement with someone else, please make sure that it is a trustworthy individual. And particularly on the Parent Plus side, like you need to make sure that you know the terms of what you're signing up for too. Like, do you have this
Yeah.
agreement with mom and dad or guardians, or are they basically saying like we're taking care of it?
Hmm. Yep. Now, private loans, I'll mention real quick, are a little bit different. They can also be considered kind of a blank check, but they will have limits. Typically, you can borrow up to the cost of attendance as well in a private student loan instead of the Parent Plus loan to supplement what you borrow under your own name. That situation would be a co-signing situation. So the loan would be in student's name, but mom or dad or guardian is the co-signer. And so that means both of you are legally on the hook. Your name is the first one on the loan, but it still affects your parents' credit if you're not making payments. So that's an option as well. It does have to take a look at credit. So the federal side of things, as long as we don't have an active bankruptcy or we don't have federal debt outstanding, like that we're not paying back. Let's say you're like in default with the IRS. As long as none of those like serious things are going on with your credit, you can borrow a federal student loan, no problem. But on the private side, they do look at income. They look at the type of degree you're going for. And it does affect the interest rate that you have and then how much you could borrow.
Very cool. Okay, so in terms of student loans, like how do they rank in terms of expense? Like, are these a high ticket loan, kind of like a credit card? Are they lower price, sort of more towards a mortgage? Like, how expensive are student loans?
Hmm. The interest rates with federal student loans, they are based on the US Treasury rate. So there's a little bit of control there with how, like, the most they could be. Um, Historically, Federal student loans will range, it totally depends on the year, but will range between like 5 and 7% on average, which is pretty okay. That's not a horrible interest rate. Private student loans, though, have a wide range because remember, those are based off of credit. And if you or your parents don't have good credit, it's really going to increase the cost of that interest rate, which will increase the cost of the loan itself. So, federal loans generally are a little more controlled, usually a little less than what we can find on the private side, um, as far as initially borrowing the loan.
Yeah, and you can see on the screen right now, like there is that range for that private student loan or private loan because it is a range. Like
Hmm.
it depends on credit, depends on where you go to. The federal
Hmm.
one a little bit more fixed, but you can see that the interest rates have been rising along with basically interest rates across the board. So the Federal Reserve has been raising interest rates since 2020, and every other debt that you can find has been following that same pattern, whether it's mortgages, credit cards, auto loans, or student loans. So right
Hmm.
now, when we're recording this, like we're in 2025, like we're just above 6%. I think it's like 6.35% currently. And it could fall, it could go higher, like we don't know, but whatever it is on the year that you need to borrow, that's basically what it is. Like there's not much you can do about that unless you're going to plan to defer college for a better interest rate, which probably not the wisest move.
Hmm. Right.
Okay, so one big question that I've had, and this is as a teacher, because I've had this happen with several students in the past where they are going to apply for FAFSA. They have parents, they have parents that are still living at home,
Hmm.
or they're not living at home, but they haven't legally separated from their parents yet. Like, there might be some friction in the home, but the parents aren't very supportive with this process in the slightest. Like they're not really willing to fill out the paperwork. They don't plan on helping to contribute towards college. And it's really seems to be leaving the student in this sort of limbo where like they want to go to college, but getting access to the student loans part seems really hard. Like what advice would you give to
Hmm.
them?
Yeah, yeah. This is something that I've seen, and there is guidance on the studentaid.gov website about this, which that's a great website, by the way, to just have access to or to read up on. But if parent or parents are not willing to be involved in the FAFSA process, and just for some background too, what FAFSA is doing is it's trying to figure out how much could your family technically contribute to your college education based on their assets, their income. Um, that doesn't mean that you won't still be offered a student loan. It just means, are you going to be offered grants, the free money that you don't have to pay back because you do have a significant financial need? Or could you be offered those subsidized loans that have the more favorable interest treatment where you don't have the interest accrue until you graduate? So that's what it's looking for is, does your family contribution look like enough to warrant not having access to those higher need things that other folks might need. But if parents aren't willing to fill out FAFSA, there is an option when you go through the FAFSA application to say that. And what they're going to do is set up probably an appointment with you or a call with you to talk through the situation and have that recorded. And what happens from there, the school's financial aid office, again, can still issue you a federal student loan. It just won't be subsidized. And you may not have access to those grants or things like that. Now, there are some other circumstances where they don't need your parent to complete FAFSA. So if you are, homeless at this point, or if there's a couple other things, if you're unfortunately part of a domestic abuse situation, there are things that they can do to avoid having to have parents involved. But if it's just as simple as, mom and dad doesn't want anything to do with it, but y'all still have a good relationship for the most part, you're living at home, then you'll just have to communicate with the school's financial aid office to help you push that application through without the parents. So still should have access, just maybe more limited access to some of the better options with grants and things like that.
Okay, good to know. Good to know. And that's studentaid.gov, great website to go to. Yeah, for extra help. Your school guidance counselor should be able to help you as well. And then also the school that you want to go to, do talk to their financial aid office because they are
Mhm.
also going to be equipped with this sort of information to help you because they want to help guide you through the process of how to come to their school.
Yeah.
All right, so we are at pretty much the halfway point, and I want to do our trivia. So for those of you who are new
Mm.
to this, we're going to do a trivia question in the middle of our presentation. It's going to ask you to come up with a number, and you're going to try not go over the actual answer. So as close as you can get without going over. Let's take a look. All right, Megan, do you have your answer? I saw that dog
I
wagging
do.
through the background. So,
Yeah.
so when we're recording this, it's National Love Your Pet Day. How much are people
Yeah, man. I have 2, so I feel like my guess might be a little skewed, and I also treat my dogs like my children. So I'm gonna also take that into account, that I have 2, that I probably spoil them a little more.
okay?
I'm gonna guess.
Oh, and don't tell
Do
your
you want
number.
me
Don't tell your number.
Okay,
We're
okay,
gonna come
I
back at
have
the
it.
end and we're gonna reveal what
Okay,
it is, and I will ask you for your
okay,
guess too.
perfect.
So,
I've wrote it down.
so if you guys have the reflection sheet, it should be on the back of it. There's a space where you can put your answer. If you're just doing it yourself, maybe just write the number down and see how close you actually got. All
Mhm,
right. Second part of this, we're going to talk about kind of repaying our debt. So we're
mhm,
taking out student loans. We have to repay them. There are options here. Like you don't just have to do like a term repayment, right?
mhm. Yes,
That's about our
yeah,
options.
with federal loans, we do have a lot more options. That's why I tend to lean towards federal loans, even if we're having to borrow, under a parent, so parent plus loans, because they have similar options as well. But we have the fixed plans, like the 10-year option you mentioned before, but we also have income-driven repayment plans, which base the payment off of the income that you're earning at that time, which could be helpful to your budget.
Okay. So is that something that you sign up for when you sign up for the loan, or can you switch between the two?
You don't sign up for a repayment plan until you graduate. So you'll have a grace period after graduation where it gives you a chance to kind of get organized with your new job, hopefully, and your budget. And you can choose what repayment plan you want at that time. And you can also switch. So if you initially sign up for a fixed plan, but it's taking you a little longer to find a job or whatever the situation, you can apply for an income driven plan or vice versa. If you start out on an income driven plan, you could switch to a fixed plan at any time.
So if you do an income driven one, I'm assuming then if you have lower income, your payment's going to be lower. Does
Mhm.
the term length extend as a result of that?
Naturally, yes. So income driven plans are very unique because this doesn't exist with any other kind of debt that you're paying back. And so the payment is just based on income. So there's not specifically a term that they say, hey, well, your payment's based on income, but it's definitely going to get paid off in 10 years because it just depends on what your income is and what the balance is when we add up those payments. But there are maximum repayment periods with these income driven plans where, let's say, you're on an income driven plan for a really long time, whatever the scenario, that's the case. The maximum time that you can be on an income driven plan is either 20 or 25 years, depending on the plan that you're on. And if there is still a balance left after that 20 or 25 years, that timeline, then whatever is left is then forgiven through that income driven plan. So technically, there is a maximum, but exactly when you'd pay off the loans, if you don't reach that maximum, just depends on what your income and what the balance is.
Very cool. Seems like a nice option, at least for people who maybe got a degree and things didn't work out exactly as they were planning in terms of their salary or their income, and
Hmm.
the ability to repay the loan that they took out might be diminished in some way from what they thought they were signing up for.
Yeah.
Very cool.
Hmm.
All right. So then, what is public student loan forgiveness, or you might see it
Hmm.
abbreviated as PSLF? Can you explain
Hmm.
what that is to us?
Yes, great question. And this is a really great program. So it's not a repayment plan, but PSLF is a program that you can pursue on the repayment side of your student loans if you're working in a public service job. So you're working for the government, or you're a teacher, or you're working for a nonprofit organization like the Humane Society or something. Um, this program will forgive your loans being on an income driven plan after 10 years. So not 20 like we just talked about, but we still have to be on an income driven plan. And if we work full time for that government job or the nonprofit job, whatever is left after the 10 years of repayment would then be forgiven through PSLF.
Okay.
So
And
shorter time.
is that something that you just kind of automatically get signed up for if you start in one of those kind of government agencies or nonprofits, or is this something that you have to actively go seek out?
I'm hoping that by the time you guys are graduating, it is automatic. They've talked about that, because if you're working for the government, the student aid system is also government, so they could, communicate. But that's not an option right now. So you do have to intentionally apply for the PSLF program, which is simply just submitting a form. It's online through the studentaid.gov website that says, hey, this is my employer. And then you send that form to your employer to sign off on. And they are just saying, yep, you do in fact work here full time. That gets sent to the student aid system and checks you off for being eligible for PSLF.
Very cool. So yeah, it's and we were trying to, when we decided that we were going to do this interview, we were trying to think about like how current we want to be versus how evergreen. And there is a lot of change going on at the moment around student loans. I don't really want to go specifically into where we sit right now, but can you give us like a little bit of an overview about how maybe government policy can impact student loan borrowers? Because I think that's kind of more interesting, is like, what effect do they have on people who have student loans?
Yeah, that's a good question. So, student loans, especially federal student loans, can tend to have their reputation to be really complicated, and it's because they are federal. There's a lot of laws that were made to make some of these things possible. Like there was a law passed to enact something to make PSLF possible. There were laws passed to allow for income-driven repayment plans. And we have the law. That's kind of the really safe, very secure version of what you can expect with student loans. And then there's all these additional provisions or executive orders or what is the word I'm looking for? Statutes that could be stacked on top of a law, where it's not law necessarily, but it was a rule that was derived from the law. And those have a little more risk when it comes to changing. So, for example, there was 4 different income-driven repayment plans. Just over time, there were 4 different ways that they wanted to allow folks to pay based on income. So each of those plans had a couple different factors to them that made them different than the other. And as of recently, they are talking about reducing the amount of income-driven plans. But one in particular, called income-based repayment, was written into law. So even if they change something with those 3 that were not written into law, we always know for sure we have access to that one IBR plan because that's kind of that base point. So the others that were brought about not by law, they could change or they could be added or taken away. But we have like the security of that base point. And PSLF is also that base point. It was written into law. So there's not, I think that's something we can rely on at this point, unless they change the law in the future, which that's always a possibility as well. But how that typically works is if folks are pursuing something that was written into law, like they're already actively pursuing it, or they already have that in their promissory note, they would grandfather folks in to that law and change it for people in the future that didn't already have access to whatever that is, if that makes sense.
I think so. And like we know that federal student loans are controlled by the government, so they do have the ability to change things about those versus the private loans, I feel like, are a little bit more out of their control. Would that be fair?
Yeah, that's a good point. Private loans owned by private companies, you do sign a promissory note when you commit to a private loan. So you could bank on whatever you signed for to be true. If you were to refinance, which would mean restructuring that loan, taking it to a different private company, then you have a new promissory note, which has new terms and conditions. But that's somewhat in your control too, because you would be making the decision to change that loan. So private loans a little more simple because it is just what you signed up for. Federal loans, for the most part, it is what you signed up for, but the repayment options could change depending on if you're going off of what was written into law or if you're going off of other options that were not written into law but are available at that time.
So, like, for example, back in COVID times, I believe the government put a freeze on having to repay federal student loans. And that's
Mm-hmm.
my understanding of it. I didn't have a student loan at the time, but that's something that can happen too, right? Is that
Mm-hmm.
if the government feels like, okay, we need more disposable income for consumers out there, they're like, okay, we're going to freeze student loans to allow people to have more income to spend, recharge the economy, not feel as pressured in terms of money. But then it can
Mm-hmm.
be turned back on as well. Did that impact private student loans at all?
It did not. And that was one downside to having private loans, is that they don't have the same flexibility that typically federal loans will have. So they were left out of that. They had to keep paying when COVID happened. And there are still options to pause payments if you have private loans, if you're having a financial hardship or something like that. But it's not as universal as the federal system. And the federal system had a pause on payments for a really long time during COVID to kind of get folks like reestablished after we got hit by COVID. So yeah, just more flexible on the federal side generally.
Yeah. And the pause really helpful for a lot of people. Also really hard, I think, when the pause stops, because now you suddenly get used to the money that
Yeah.
you currently have versus what you're going to have to pay now. So if that ever does happen to you in the future, where like your student loans get paused or changed, try and be aware of that, and maybe see if you can keep saving along the side for when that does get turned back on, or keep it in your mind that like that's not money that you can just rely on when it comes to your budget.
Hmm.
Those are good strategies for just making sure you don't get kind of caught unaware when the money does need to suddenly be paid again. But
Hmm.
as you said, like if you are having trouble with your student loans, you can contact whoever issued the student loan and say like, hey, I'm having hardship with paying these things. Can we restructure it in some way? Can we pause it? Can we do different things? Just like with most debts, you can try and get help from whoever's issued you the credit to see if you can make it a little bit more bearable.
Hmm. Yep.
Okay, so speaking of numbers, of course, let's talk about how much we should borrow for college or a
Yeah.
student loan. There's no hard or fast number here as to like how much you should borrow, but I'm curious what your thoughts are. Like, if you have to borrow to get a degree, what rule would you
Hmm.
follow?
Yeah. I think this answer is always frustrating, but I do think it depends on what you're going to school for. And there's a lot of factors that go into the cost of school too. So, in state versus out of state, that's a big factor in how much you're going to pay for your education. If you're going in state, you are going to pay a lot less because you've lived in that state, your family's lived there. They've paid taxes into the system to kind of subsidize the cost for you to go to an in-state school. Out of state will typically be 2 to 3 times the in state cost. So that's a lot. That's a big difference. But there might be reasons why you want to go out of state. You know, you might have always dreamed of going out of state to, Mississippi or UGA or something, but you live out west. So, that's those are the scenarios that could happen. And you just have to decide, is it worth the investment? And so I do encourage folks to think about paying for school, the cost of attendance, think of it as an investment in your future. And statistically, like those who have a college education will make more income statistically. I think that's still true to this day. There are some professions, though, that you may not need a college education for that are still very good paying jobs. So that might be something to do a lot of research on before you commit to going to school. You don't want to go to school just to go to school for the experience. You can have friends that go to school for the experience and you can go hang out with them. But I encourage folks to really think about, what do you want to do? Is it, something in business? Is it something medical? If you want to be a veterinarian, you're going to have to go to school. So there's no way around that. You can't teach yourself that on YouTube. But if you want to get into business or marketing, you may not need a degree depending on what kind of job you're looking for. Or if you wanted to start your own business, you may not need the degree. So that's something to think about. Medical, I will say, is probably the most expensive as far as like the cost of attendance goes, but it's also the most necessary. Like if you have to, or sorry, if you want to be a vet, a dentist, a physician, a nurse, you're going to have to go through and get an education. And so those positions will tend to have a larger debt balance because you'll go to graduate school as well, potentially, if you want to be a physician or a dentist or a vet. And then the income potential for those jobs tend to make sense. And then also there's public service loan forgiveness for medical professionals that work in hospital settings or things like that. And let me think. The last thing I was going to mention there is, and I'm not totally answering the question, like what exactly should be the ratio. So let me get back to that. I think if you're going to be borrowing more than what your annual income is post graduation, so get an idea for, this is what I want to do. This is the potential income I could make. And there are certainly ranges that you can research. So get a good average of what you think you can make in the future. And if the cost of you going to school is going to be a lot more than that potential income, then if that, if that's the case, maybe look at other alternatives for cheaper schools, or, get some scholarships maybe to help out. But that's where you're going to have to consider probably relying on loan forgiveness. And so it has to be worth the investment. Are we going to be working in public service? That could help. And if not, we may have to rely on those income driven plans to get us to forgiveness after paying for 20 years. And is that worth it to you? Now, if you do that same exercise, get a feel for what your income could be after graduation, and it's going to be higher than what your student loan balance could be after graduation, then that could be a good return on investment, because your income is going to be enough to be able to pay that down on probably a 10-year schedule to get it paid off sooner rather than later. So those are maybe some thresholds to look at, is where does that balance look, or how much is that balance in comparison to your future income, and go from there to decide if it's worth the investment.
And I'm thinking from a budgeting perspective, like I know you do financial planning as well and coaching. So what would be your ideal number to stay under for percentage of your take home pay that should be going towards student loan debt?
Yeah, I would say 10% or so. If you're on an income driven plan, it might be a little lower than that. But ideally, 10% of your income is going towards paying back the loans. And then the other money, that's for housing and for saving for your future, that kind of thing.
So yeah, this is a different way of thinking about it. Go to a student loan calculator. There are tons of them online if you Google them. And just see like, okay, if I borrow this amount of money at this interest rate for a 10-year term, so let's say we're doing a term repayment plan, what amount of money is that going to be? And then what's my expected income? And take a look again online, like what's the median starting salary for the job that I think I want to qualify for in the area that I want to live in, and see like, okay, if I'm going to be making $2,000 a month in take home pay after tax, and my student loan payment is going to be like $500 a month, that's a lot of money. That's a quarter of your salary that's going to be going towards servicing the student loan. And that's going to make you feel very, very like a little bit of hardship going on in the other parts of your life, because so much of your money is going towards the student loan. I like that rule of thumb, like don't borrow more than 1 year's worth of expected salary. That's kind of the rule of thumb for keeping you under that 10% of take home pay. But in terms of an investment, like you're going to have the part you borrow, and then you're going to have the part that you put in yourself. Like you're still putting your own cash in too. And when we think of an investment, we think of, we want our money to grow in value. That's what an investment should be. Now it's a little bit different because we're investing in ourselves, but you think like, okay, I'm going to put 50 grand into an education that's going to get me a job that earns 70 per year afterwards. Is that going to be worth it to me or not? And some ways to judge that would be like, well, if I did a cheaper alternative, like I did a job where I don't need any experience and I can just start today and start making money, how much would I make? If I were to invest that money in the stock market, and how much would that grow to be? Like there are different rules that you could measure it against to see, is it a good investment or not? But I'm curious, what would be your advice for ways to reduce the amount that we have to borrow? So the cost of college in general, and then therefore how much we have to borrow for it.
Yeah, great question. Because there are proactive things that you could do to try to reduce the cost. One quick and easy way would be probably stay in state if you can. If there's a good college in state, that would be one of the best ways. Or there are states that have reciprocity, which is where like if you, and I'm making this up, definitely go look to see if there's still a relationship with these states. But let's say, I live in Georgia, but I really want to go to Tennessee. There might be an agreement between Georgia and Tennessee where you can still have in-state tuition. So that's something to look up for your state and your school, if there's any in-state, out-of-state, like reciprocity is what they call it. So that's one way. Another way would be for undergrad education, I would suggest maybe looking at working during school. And some folks might like their stomach might hurt hearing me say that. But I would say from experience and from the folks I've worked with in the past, having some education, so going to school for your education, that is your first priority, getting through and finishing school. But it's also super valuable on your resume to have some experience, some real life experience in the working world. So this is a great opportunity for you to find maybe some paid internships or even working for the school, or just a job in general that might give you some skills that look really attractive to a future employer, where you could work part-time while you're going to school, something that can work well with your school hours, your class times, make some money while you're doing that and get that experience. And while you're making money, that can pay for your food, your, laundry, that kind of thing. So some of the smaller expenses, because you won't be making, a ton potentially with this part-time job, but it can help subsidize the cost. And it does a really good job of just helping you kind of further your career because you have experience where other people are not doing that. It's more common for folks to just go to school and spend most of their time, doing school stuff, but also like the extracurricular activities with school, which is still fun. You could still do that with a part-time job, but that's one suggestion. Another is to look into kind of similar but work study programs. There are colleges that will hire you in the school system, and they will subsidize your tuition, which means just reduces your tuition cost. Similar for like being an RA or somebody who is kind of the point of contact for your like housing hall. Like if
The dorm
there's
rep.
a
Yep.
yeah, they could cover the cost of your housing, which is really significant, or reduce the cost of your housing. So that's another way. Grants and scholarships, I would seek those out. Make that your part-time job. The summers leading up to going to college. See what you can find. Look at profession-specific scholarships or grants. If you want to be an attorney, there's lots of organizations out there that want to invest in the future of lawyers, and there may be some opportunities to find some money there. And let's see, those are some of the big ones.
Mm-hmm. Yeah, I agree with the
That's
grant
probably a good
scholarship.
list.
We've had a lot of guests who've talked about that. Like you will, and there's studies that come out about this, that if you treat applying for grants and scholarships like a part-time job, you will probably make more from what you win in grants and scholarships than you would earn from that part-time job. So it
Yes,
actually is worth putting the time
true.
into it. There's a wonderful friend of mine, Cody Berman, who has a great story about that and how much he made from applying for grants and scholarships, like way more than he would have earned from any part-time job.
Yeah.
The work study programs are awesome. Usually it's like some job on campus where like you're monitoring like a gym or laundry or something like that. And like the amount of work you have to do is very minimal, and you're allowed to study on the job. The expectation is that you're going to be able to do some schoolwork whilst you're working. And yeah, either you get paid a stipend or it reduces your tuition, both great options. And yeah, working part-time, like the studies show that if you work not a huge amount, like it's like 8 to 15 hours a week, you actually tend to do better in college because you have to be more organized. And this goes with being an athlete as well. Like student athletes will actually sometimes do better than general population students because they have to be more organized about getting their work done and being prepared. So it's not necessarily a bad thing. Like you don't want to overdo it. You don't want to be doing 40-hour work weeks and college at the same time. Like, but if you can pull it off, it's a great way to reduce the amount of money that you are borrowing. The only other thing I would add in that you didn't mention was going to community college. So like,
there you go. Yeah, good one.
I know it's not the most exciting of options in a lot of cases, but getting some of those credits out of the way in community college, also doing AP classes, dual enrollment, CLEP tests, things that will reduce the amount of credits you need to take at the expense of college will reduce your overall cost as well. Because remember, you usually pay for college by credit. So the less you need to take, the cheaper your education is going to be. So if you are in high school and you have the opportunity to do dual enrollment or AP, definitely consider it. CLEP tests are a way of kind of testing out of having to do different subjects and getting the credit for it. So look into those and see if they're offered in your area. Putting the time into doing well in your ACT or SAT, it actually does translate to dollars in a lot of cases when it comes to the merit-based scholarships that colleges offer. So yeah, there's lots of ways to think about trying to reduce it. And as you said, with grants and scholarships, like look for lots of different ones, like either from your community, from alumni that your parents might belong to the profession that you want to do, to organizations that you belong to. Like there's so many different groups out there who offer scholarship money, and so much of it goes unclaimed every year because people just don't apply for it. Like your odds are actually better than you would think.
Yep. Love it. And I would say I'm a success story for some of those and my siblings. I did stay in state when I went to school. I had, here in Georgia, we have the Hope Scholarship if you have a certain GPA. So that really helped cut down the cost of tuition for us. And I did a lot of AP classes. My sister did more than me. She's the smarter sibling, but she got a lot of her college, prerequisites, like the couple years before you actually kind of get into your degree classes. She got a lot of those taken care of, which, like you said, translated into just not having to pay for those credits, which was really helpful. So don't sleep on AP classes, or making sure your GPA looks good can certainly save you some money.
Yep. I have a success story as well. I went to grad school as a graduate assistant. So my college
Mm,
paid for me to go do grad school there and coach women's soccer, and gave me I think it was a 10 grand salary as well while I was there, a stipend. So like
nice.
grad school totally paid for. It's a great way to do it. If you can
Hmm.
find those positions and apply for like a job, you have to interview
Hmm.
for it, get accepted for it. And then it was great. It was a wonderful way to get my master's degree paid for.
Hmm. Love
Final
it.
tip actually I have for you is to negotiate for the tuition. So when it comes to kind of springtime and colleges are trying to really finalize, who is applying, who's getting admitted, there's going to be a lot of colleges who have space still, and admissions offices are trying to fill those spaces. So if you're kind of, in between a couple of schools, call their admissions offices and say like, hey, like I'm in between a couple of schools, your tuition is this, their one is this, I can afford this, can you help me get to that number? And I always love phrasing it that way, like, how can we do this, can you help me get to there? And see what they
Hmm.
offer, see what they throw out there, because you never know when they might be like, okay, we can add in some more stuff, we can lower this, we can do that, we can move these
Hmm.
pieces
Give you a
around.
grant.
Yeah,
Yeah.
there's always money to do it somewhere, and they much rather have some of your money than none of it if you go somewhere else.
Right. Exactly.
Competition for students right now is really heating up between colleges, so you are a valuable commodity to them.
Hmm.
Let them fight for you.
Hmm.
All right, this has been an awesome conversation, Megan. I do want to see some student questions, so if you
Hmm.
have questions, you make sure you drop them in the comment section. Megan and I will try and answer those for you, but I have a couple of them here that I got from my students beforehand.
Hmm.
Sarah asks, how do I get the money from my student loan? So you talked about like the tuition is directly paid by the student loan issuer, but there was this other money that we could kind of use for whatever else. Is that just like sent to us as a check? Do we
Hmm.
get a wad of cash? Does it just end up in our bank account? Like, how does that work?
Yeah. So either or. It when you fill out the application, you accept the award offer for the loans. They go ahead and pay tuition with the loan money initially, and then you get the refund that I mentioned. And you put in your banking information if you want direct deposit into that, like acceptance, like accepting the award letter. You could put in for direct deposit, or you can have them send you a check, whichever is easier for you, and that's how you get your money.
So it might even be worth having, like, if you can get a free checking account set up, like just a separate checking account for college money, so
Hmm.
you know exactly what's going for college and
Yeah, good point. Yeah.
all right. John asks, what happens if, I'm halfway through my degree and I change major and now suddenly I have to do an extra year of college?
Mhm,
Like, how does the student loan process work there? I've already kind of signed up for what, 4 years
mhm.
of student loans. Can I change the terms? Is it a new student loan? Like, what happens?
Yeah, you could change the term. So the loans are issued annually, and they give you half of the loan. Like, let's say you have two big semesters per year, which is very typical. Then you'll get half of the awarded loan money in the first semester, and then half in the second semester. So let's say you decide you want to change your major, and it's going to mean you have to take some more classes, or it adds on another year. You would simply just apply again, and there is a little wiggle room with how much you can borrow. Like, I said, the last year you have up to 7,500 that you could borrow under your name for the federal system. Um, that could mean a fifth year as well. So it could be 4 year, 5 year, however long it takes, up until age 24. And then if you're older than 24, that's their age limit there. You actually have a bigger bucket because you're no longer a dependent on your parents, as per the student loan system says.
Mhm.
So if it takes you longer, or you go back to school, like, you might have more money that you could borrow because of either your age, or because you have, just access because you're under 24 still.
Okay. And if I drop out of college, like I decide, halfway through college is not for me,
Hmm.
um, I'm assuming I borrowed X number of dollars that has to be repaid, and the rest of it would just not be paid. Like, it would just be kind of like they would stop issuing you the student loan, and you just have to repay back whatever you've borrowed.
Correct. Yeah, if you withdraw, then the following academic periods, even if you got approved for the full year, the following academic periods would not be issued if you withdraw. And if you do withdraw earlier on in the semester, there's like an add drop period. You can actually refund the full amount of loan that you got, and they can refund the tuition money as well if you do it within the add drop period. So you don't actually leave with a loan from that semester if you dropped out early enough. But if you had loans from prior semesters, those you will still be on the hook for, even if you drop out later, because it was education that you took advantage of during those times. So those loans you'll have to pay back.
Okay, good to know. So yeah, if you have other questions, do drop them in the comment section for us in this video. We'd love to answer them for you. But we're going to go into the last part, and that is, Meagan, what is your number one tip for teens when it comes to building wealth? I ask this question to every guest who comes on, and we always get some really cool answers.
Ooh, okay. My number one tip there, I would say it starts with having goals, specific, measurable goals for what you want out of life. And I think that gives you a lot of direction in how you manage your money, how you manage your life, right? Because if you're doing things that don't push you towards those goals, that's a problem. If you're doing things that do, that's motivating. That will translate into positive things with your money, with how you spend your time, and all of that good stuff. So I would say have very specific and measurable goals that you work towards, and they can change over time, of course, but find a way to track and monitor those goals too, to make sure you're getting there.
Follow-up question. What do I do if I have no idea what I want to do? Because that's a very common
Yeah.
situation I get in my, even my high school seniors. I mean, they're coming to spring semester, and this was me in high school. I was very undecided about what I wanted to do in spring semester of senior year. How would you start setting a goal when you don't really know what you want? Any tips on figuring out what you want?
I think that's a good question. I think a gap year is, I think sometimes folks don't want to do that because then they're a year behind their friends that did know what they wanted to do and they went to school already. But a gap year could be a great opportunity to maybe do some internships or part-time jobs or full-time. If you're not going to school, take on a full-time position at a dentist office if you think you want to be a dentist, or at a hospital to see if you want to be a nurse, or find maybe a lower, don't have to have a degree job, like an admin type job in something that you think you might want to do, and see if that's what you want to do. And then that can help kind of guide you. And if you want to go to school at the same time, the community college option is a great option to just get some of those prerequisites out of the way. And you could still do like a part-time job in the meantime, to, a couple part-time jobs to figure out what you want to do. And I did this myself because I wasn't exactly sure what I wanted to do. I knew I was going for a business degree, but I did a job during my undergrad at a gym, which is kind of funny, but a gym, and I did the books, the finances of the gym. So the money coming in, money going out, I did all the accounting work for it. And I realized, oh, I like finance. I like money and tracking things. And then my next job, I was curious, do I want to stay in corporate finance, like business finance, or do I want to work with people and do personal finance? So my next internship next semester was at a personal financial planning firm. And I realized, oh, wow, I really like financial planning. I want to do this. So that really helped shape me to figure out which direction I wanted to go. And it started with a couple jobs that I got paid for to make sure that that's what I wanted to do. So that might be my biggest suggestion there.
Yeah, just get out there and explore. And that was something that helped me a lot as well, was just spending 2 weeks in a couple of different jobs. I was like, oh, maybe I want to do this. And some of them were like definite no's. Like I realized I did not want to be an architect because I just did not enjoy the vibe of being in an architect's office all day.
Right.
So it can help you decide what you want or what you don't want. And both of those are very valuable pieces of information. So yeah, get out there, explore, try things out, and just see for yourself. And if you can make it work in a paid situation, great. If not, volunteering is always an option too. And just see how you can help out, what you can observe while you're there. Awesome advice. And thank you for answering the follow-up question too, because that's always a hard one, is to figure out what on earth we want. All right, everybody, let's find out the answer to our trivia question for today and see how close you got. Let's check it out.
Nice.
2,717. What was your answer, Megan?
Mine was 1,500. So
Oh, wow.
that's higher than I thought. I thought I was going over. I was a little nervous about that.
So yeah, hopefully in your classroom, you can have a little friendly competition, see who got closest to it. But 2,717, according to rover.com, for the amount of the average dog owner spends on their dog in a given year. It's a lot. Before you sign up
Yeah.
for a pet, make sure you understand that there's a total cost of ownership that's involved with it. And it ain't cheap. I've got two cats at home, and I'm pretty sure our budget goes somewhere between 200 to 250 per month for having two cats.
Oh,
So
wow.
it adds up.
Yeah.
All right, Megan, thank you so much for your time today. Please let everyone know where we can find out more about you and about student loans.
Thank you. Yeah. So I think the best website for student loan information, studentaid.gov. That's a source of truth with all federal student loan information. There's information on private loans there too, for the most part. And then you can find us at studentloanplanner.com. We do a lot of writing, so blogs, articles on student loan topics, and we have a lot of calculators on our website that you can use to really get a feel for this type of financial topic, along with profession information. So if you think you want to be a veterinarian, we've got a whole section for veterinarians and how to handle the student debt that comes along with becoming a vet. So I think those two websites could point you in the right direction.
Awesome. And social media?
Social media would be at Student Loan Planner, pretty much on everything. So Instagram, Facebook, Twitter as well, I believe. Well, X, I guess is what it's called now.
Perfect. Well, thank you very much for your time. And thank you all for watching today. Watch out for more broadcasts coming soon and enjoy the rest of your day.
Thank you.